We at Eurex, we're looking at the whole digital asset space and what has been happening over the past year or so in this space. And talking with our clients, we saw here an opportunity to bring to market a product that answered some of their concerns to the industry. There was a lot of concerns about counterparty risk going on, operational risks of going directly onto digital assets, but also some regulatory risks due to some of these crypto markets operating in low regulated jurisdictions, sometimes offshore. And then we decided to partner with FTSE to bring to market a regulated product through the traditional channels which the clients are used to, and offer them access to this new and exciting asset class. Why we chose FTSE? It's very simple. FTSE Russell have a long-standing history of managing and creating benchmarks in various asset classes. Then with this partnership with Digital Asset Research, they have brought to market some benchmarks where you can use to benchmark digital asset prices. We looked at their methodology. We found it to be very robust and thought through, and therefore we decided to partner in bringing these FTSE Bitcoin futures to market. There are many risks in going to a new asset class. Crypto assets are no different. They bring their own inherent risks. For example, when looking to trade directly on crypto markets, you may need to consider that you need to hold your own assets in your own wallets, and therefore you bring on operational risks to that. You might be facing some regulatory risks depending on which venue you are trading. Some of these venues might not be regulated, so you have some trading execution risks on trading on these venues, and a number of other risks. What we done in conjunction with our clients was to develop a product that addresses a lot of these risks. We brought a product to market that gives the clients that exposure to the Bitcoin by reducing the operational risks and introducing the risk management which the clients are used to when trading equities or fixed income derivatives at Eurex. Our contracts, they are cash settled, so all the client has to do is to trade on Eurex through the existing channels without the need to set up additional accounts, additional relationships, or funding separate accounts. They just trade through the existing channels and systems, and on the end of the contract life, our clearinghouse guarantees the performance of that contract, and the contract's just settled into US dollars or euros, depending which contract you are trading. So in a nutshell, what we are offering is low barrier to entry access into crypto exposure, but reducing the risks involved in accessing the market. These products, they are very similar to trading, for example, in Eurostoxx index futures. Clients use the same trading channels as they are used today to trade. You do not need to set up new accounts or authorizations. Yes, you do potentially need some risk limits internally, but from an exchange point of view, this is just another index future contract. And settlement is cash settlement, so you don't need to take into consideration receiving spot cryptocurrencies and having to custody them, or there is no physical delivery here. We have a number of liquidity providers today, providing liquidity in the contracts, which trade 21 hours a day, 5 days a week, so from 1 o'clock Europe until 10 o'clock. They are more the traditional exchange clients, which already trade other asset classes with us, and also have desks which trade digital assets. However, we have also received interest from crypto-native firms, which are looking to come into the exchange space, into the more regulated environment, because given all that's happening on the crypto space, they see this market moving into a more institutionalized, into a more regulated environment, and therefore they want to be part of that. They are in discussions with us to also participate there. From the client point of view, we have had a number of interests, and these range from brokers, some banks as well here in Europe, but also crypto native funds began their lives, they're trading on crypto exchanges only, but are seeing the benefits of trading through a more traditional exchange and reducing or mitigating the counterparty risk on that exposure. We also have had interesting discussions with the more traditional asset managers, which are exploring ways of getting exposure to this asset class. They are evaluating whether you go directly into the spot, via futures, and they have been quite receptive to our proposition here. We have a number of plans in this space. We're here to stay. This is just the first of many products that we're exploring in this space, and we are in active discussions on new product ideas. Options is part of those discussions, so watch this space and we'll see. It took us a long time to bring these contracts to market because we went through the regulatory process here in Europe to get the contracts approved by BaFin, the German regulator. So the contracts exist within a MiFID environment, they are approved by BaFin, and they are traded like any other financial product today in Europe. We also recently, as of the end of last month, have the contracts approved by CFTC in the US, which means that US investors can trade directly on Eurex in these contracts from the US, and we are able to distribute this contract in the US as well. We have a diverse client base here in Europe, which have expressed to us that they would like to have a liquidity pool of crypto in European time zone. Therefore, we are actively interacting with our clients here, which are direct participants of the exchange, to increase the traded volume and to build that liquidity pool here on the European time zone. But that's not to say that the contract is not tradable or there is no liquidity in the other time zones. As I said, our liquidity providers are there on the screens, and also OTC during the 21 hours of trading during the week.